Hey everyone, welcome back to Corporate Decoder. Today, Kun Peng International Ltd just filed an 8K about a reverse stock split, and I am seeing a classic sign that often precedes trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is making a big move to boost its stock price. But history shows these moves can be a double-edged sword. So what exactly is happening here? The Securities and Exchange Commission, or SEC, requires companies to report big events. Kun Peng International Ltd, formerly known as CX Network Group, Incorporated filed this report to let everyone know about a major change. Kun Peng International Ltd, which trades under the symbol KP on the OTC markets, is undergoing a 1-for-10 reverse stock split. This means for every 10 shares of stock you own, you will now have 1 share. This type of action is usually done to increase a stock's price per share. Often a stock falls too low and risks being delisted from an exchange. By reducing the number of shares outstanding, the price per share goes up, assuming the total value of the company stays the same. The press release announcing this was dated May 29, 2026, and the split is effective in the market on the 2nd of June 2026. Before the reverse split, the company had a massive 400 million shares outstanding. After the split, this is expected to drop to around 40 million shares. This is a huge reduction. Also, as part of this, they are decreasing their total authorized shares from 1 billion down to 100 million and increasing the par value of the stock from a tiny fraction of a cent to 1/10 of a cent. This is all done to make the stock look more stable and attractive. You'll notice the trading symbol will change temporarily to KPEAD for about 3 weeks. This is a common practice after a reverse split to signal that the stock has undergone this adjustment. Now let's talk about why this is important and what it could mean for investors. Companies typically do a reverse stock split when their share price has fallen significantly. This often happens when a company is struggling financially or its business model is not performing well. While the intention is to make the stock appear healthier, it doesn't actually fix any underlying business problems. Think about it this way: if you have a pie and you cut it into fewer, larger slices, you still have the same amount of pie. The reverse split does the same for your shares. The total value of your investment theoretically remains the same, but you have fewer shares, each worth more. However, a reverse stock split is often seen as a red flag. Historically speaking, many micro-cap companies that undergo reverse stock splits eventually end up delisted or facing bankruptcy. For example, Kodak did a 1-for-20 reverse split back in 2021, and their stock price continued to struggle, falling by about 40% in the following 90 days. Investors often see a reverse split as a sign of desperation. The reduction in authorized shares from 1 billion to 100 million is also a significant move. It means they have far fewer shares they can potentially issue in the future. This can be seen as a way to prevent further dilution if they were planning to issue more stock, but it also limits their flexibility. Here is the key takeaway. A reverse stock split is a cosmetic change. It doesn't magically make the company more profitable or its products more desirable. If the core business issues aren't addressed, the stock price can continue to fall even after the split. In fact, sometimes the price drop can be even steeper because investors are reminded of the company's underlying weakness. The company also includes a standard forward-looking statements section. This is where they basically say that what they expect to happen might not actually happen. They use phrases like may, expect, and anticipate to cover themselves if their predictions don't pan out. It is a legal disclaimer essentially warning investors that the future is uncertain. Looking at Kun Peng International Ltd from a broader perspective, its current market cap is around $12 million with a stock price hovering around $0.38. They have about 33 employees. The recent news headlines all focus on this reverse split, further emphasizing that this is the main event driving awareness for the company right now. What is the story here? Kun Peng International is trying to stave off delisting and perhaps make its stock appear more appealing to institutional investors who might have minimum price requirements. But the market is often wise to these tactics. Without a strong underlying business improvement, this reverse split could be just a temporary fix. My biggest concern is that this reverse split is a symptom of deeper problems. The company's ability to generate revenue and profit is what truly matters, and a stock split doesn't address that. I'll be watching to see if they can actually improve their business fundamentals, or if this is merely a move to prolong their presence on public markets. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, hit like, subscribe, and join our Discord.